December the 3rd, 6:30 a.m. And this morning I want to talk about Enron. Enron was an American energy commodities and services company based in Houston, Texas. Founded in 1985 as a merger between Houston Natural Gas and Internorth. Fortune named Enron America's most innovative company for 6 years consecutive. The reason that I want to talk about Enron is because December the 2nd of 2001, they filed bankruptcy after being named the most innovative company by Fortune for 6 years. So why did they go bankrupt, and what effect does it have on us, and why do we care today? Okay, so why did they go bankrupt? Well, do your homework and you can find that information out for yourself. I recommend a documentary or the book called Enron, The Smartest Guys in the Room. Excellent, excellent, excellent explanation and a good starting point on it. But that's not for today. This is what we're going to talk about today and what it did to the stock market then and where we are today in our stock market. So this is historical gains and losses, and Enron fits in right here. So we can see that after the result of their bankruptcy in 2001, their filing ended up having a profound effect on our economy at that point in time. This is a bigger blown up chart so you can see here what happened. This is 2008, okay? What's the difference between these two right here and where we are today? I worked at Haynes when Enron went bankrupt, and those of us there that remember that time, I was a salaried person, and so we called it Black Friday, and we watched, on those of us that were there, we watched, and every week we were wondering if we were going to be one of the ones that were going to be driven to the gate on a Black Friday. It just seemed like that's how it always happened. I survived that time period. I was a brand new employee, but it burnt. It burned a memory in my head. And the reason that all of that happened was because of what happened in the credit markets when Enron went bankrupt. So you have businesses that run on credit, and it's like in our own personal households, if we manage them based on credit cards rather than managing them based on cash and savings. So we have an entire economy, a monetary system that's based upon credit. There is no savings. And that's one of the things that happened here. The credit markets froze up. Businesses could not buy raw materials because they're bought on credit. Well, if you can't do bank transactions across continents, across oceans, then your goods are stuck. Even if you have the money to produce them, your goods are stuck because you can't do the banking transactions to get them to the final seller. So that puts a halt into the system, and the subsequent event, the subsequent result is layoffs, recessions, and the other. Okay, so we had all of this happen. We know we bounded back a little bit, but we've got a pendulum that's swinging here right now. And each time you can see the pendulum is getting a little bit higher and a little bit higher, and then it's going to go kaboom. And we talked about the exponential curve. Basically what that is an expression of the exponential curve, so that when you get to the critical point, you cannot level off and stay. It has to crash, which is what happened right here then. We can see in 2008 hasn't been that long ago, but we as human beings tend to have very short memories. Okay, so this is the Enron stock going to zero. This is what happened in the stock market. Gains and losses, suffered a loss in here, and then it swung a little bit, and then it tanked. So what happened here after this is what we want to look at again. So here is the monetary base. Basically what happened, this gray line here coincides with this recession right here. So the government and the Federal Reserve went into full steam ahead, printing money and increased the money supply. The definition of inflation is the increase in the money supply. It's not pricing. Pricing is a result of inflation. See, the definition has been changed on us again. We think that inflation is an increase in prices. So when we go out and we buy things, we don't understand that in fact we haven't even really seen. We're just beginning to see the effect in our pricing. Okay, so the monetary base exploded and it printed, and so we have this exponential curve again. You can't just stop printing money when you've done that. It doesn't happen that way. So then here we have an increase in the money supply. This graph isn't real big, but during the recession here that started in 2008, there is a sharp increase in this here, and if you expand that graph, you can see that. And then, but what we got to talk about here too also is the excess reserves that are at the bank that exploded. This is a whole different subject. If you're interested in the financial side of things, in the banking side of things, send me a message on Messenger and I'll be happy to address those questions that you might have at a different time. So we are looking at money supply and excess reserves, and we see that it's going crazy. So why do we care about that? Because supposedly our paychecks are going up too, but I think if you'll look back and see, you'll see that pricing is going to go up in a much greater rate than what our incomes are going to go up. This is a nice little graph about inflation, okay? And you can see that we have two different things going on here. One of them is everything, okay? What happened here? You've got gas and food, but you had gas prices tank. And so this shows that we really don't have much going on. This line includes gas, energy, and food. And see, it's hitting us in a pocketbook. How many times do we go to the grocery store and we check out and we think, how did I spend that much money on what's in my basket? Well, they hide it because packaging is smaller, therefore that we don't see a market difference in the price. You have to really get down and do the calculations to figure out what you've got going on. So let's move forward here. Why do we care about any of this today? What difference does it make what went on with Enron 17 years ago? Okay, my graph is kind of, this is the producer's price index. This is basically the pricing for the goods. This is the price that producers have to get in order to break even, okay? It's a separate calculation, so don't worry about it. Just notice the graph here that their costs are increasing. There is an increased cost through the supply chain that has not yet made it to the final product that we as consumers are going to see. Back in World War II in Germany, this is the same thing that happened, and people were paid twice a day, and they had wheelbarrows full of paper, and they took their paper that they used to call money, and they would start fires with it because it was worth more to them to start a fire, to get warm or cook, than it was to be able to go buy a loaf of bread or anything else because the pricing hit. Okay, so we have not yet seen the final result of what is coming. Now, why do I see concern here? I had the opportunity to teach economics at Ivy Tech, and it was 5 semesters. Microeconomics, this is one of the textbooks that I taught from, and macroeconomics, this is the other textbook that I taught from. I have boxes of books if you really want to see what I've got. But here we go. America's Great Depression. Economics in One Lesson, Henry Hazlitt. I recommend this if you are interested and you want to educate yourself. Very readable, very, very easy, a good one. Blind Robbery. This is from the Mises Institute, and anything that you get from them is based on market economics, and will explain to you the things that I've explained this way rather than from this perspective. which is a whole different school of economic thought that does not work, and it has proven itself not to work over the course of mankind. You can study it all the way back if you'd like. But the book that was the most influential right now, and this was written in the 1950s. It's a compilation of two books. Pawns in the Game is the one, because that's what we are. We are pawns in the game. It's about money. It's not about us. We think that we are getting ahead in this world, and we're not. We're being pillaged and plundered. So what do we do? What do we do? What difference does it make? Well, I can't tell you that, because that's not for me to tell you how to live your life. That's between you and God. Excuse me, not between you and me. I am very concerned that Enron bankruptcy timing being this week, because there's a lot of things that are going on. We have a former president that died, and it's already been announced over the weekend that the stock market isn't going to open on Wednesday. Now, you can say anything you want to say, and you can interpret it any way you want to interpret it. But for me, what it tells me is that I'm a little bit concerned that maybe something's going on, because we know, we have historical evidence that those who play the game, the gamers, they're the ones that are running the show. They're the ones that are making the rules, the accounting rules, and it's not a coincidence. There are no coincidences. History repeats itself. 17 years ago, this is the beginning of the tanking of the American economy, which led us to 2008. The malinvestment from 2008 was never driven out of the economy. Money was printed to cover it and to further line the pockets of those who write the rules. Okay? Do you understand what I'm saying? Do your homework. Think about it. The time is now. There is no recovery, none. We cannot recover. It is mathematically impossible to recover from what is coming, because we have been printed into oblivion. When the world loses faith in your monetary system, you have no monetary system. Banks fail. It's historical. You notice the shape of these curves, okay? That's what we have to be concerned with, is the shape of the curve. A crash is coming soon. Very, very soon. Please, please, do your homework and open your minds. Jesus is the way, the truth, and the life. No one comes to the Father but through him. Peace, my friends.